So this video is a recording of my February 2024 live webinar where support and resistance is the main focus. Now we'll look at multiple time frames overlaying those support and resistance zones and looking at those strong confluences. So check it out. Hour long, lots of learning, lots of technology to help us identify those support and resistance zones.
So we can share it with the community because not everybody can get off if they're in the US at midday. As I said, it's 9 p.m. here. So we're going to go and we talk about support resistance. Before I do that, though, I'll talk about this trade that I went through yesterday. I did share it on the Discord group, but I was taken out far too early because of a data issue. So there we go. Without trying to be too negative about funded trader programs. So a couple of days ago, I thought, you know what, I'll see what it's all about. I've been trading for 20 years. I trade live with real money, and I've done it for a long time. I'd heard a lot of negative and positive things. So I went into it with an open mind. And yesterday, I lost data with Rhythmic. And today, I lost data with Rhythmic. I never lose data with my live trading account with NinjaTrader Continuum. And probably once every 3 months, if that. It's so stable. So today I was in this trade and on ES with 2 contracts. And I'd still be in it right now if it wasn't for Apex Rhythmic data going off. Okay. Ever since I loaded it up onto I've got a multi-broker platform because I trade quite a few accounts, and I just added Rhythmic on there for Apex, and it totally ballsed up my NinjaTrader. I couldn't run live with NinjaTrader Continuum, my live trades at the same time as that Apex, and it was really, so I managed to get through that and got it stable. And then today, first trials, I was trialing a few things. I was looking at, how much slippage there was and whether it's, how stock market orders behave, all that sort of thing, just trying it out. And then I got into this big trade. I'm going to talk about this trade right now. So the first contract I took off was at this point here with this arrow. The second, I had no choice because at 8:45 a.m. this morning, I had that sound connection lost, okay, which I did yesterday on Rhythmic as well, by the way. So it took me half an hour to get it back working again. And then the data was behind. So I had to reload historical data. And when it says that, it closes the trades that you're in. Okay, you don't know where those trades are because the chart isn't updated. So that was a very frustrating instance for me. I'm not saying all funded traders are the same, but with Apex and Rhythmic, the first 2 days, I am not impressed. Okay, it was a 100K account. I qualified today, first day. Not a problem. Okay. The only issue is, this is where I should be. This is where it took it out. This is a $3,000 trade. Okay. Instead, it was over $1,200. This one trade would have passed the evaluation. I had other trades on at the time, and it just couldn't cope. It just felt like I was doing well, and they switched the data off. I'm a bit skeptical, but the reason why I wanted to try it was we have got quite a few users of our software in funded trader programs. Now, some may be good, some may be bad, but my experience so far, because I thought I'd bite the bullet so I could help people, is not great. But that's just a couple of days. So let's see how we go over the next week or so. So let's go through this. What I want to talk about really today is support and resistance zones and how to understand that behavior. So I'm going to use the NinjaTrader, the Guardian zones, because these are automated. So we spent a lot of time developing these support and resistance zones on different timeframes as well. And one of the things I talk about in the book is confluence. I know, Christine, you've got the book. I think Gary, there's a few other people who've got my book. And I talk about confluences. So really, one of the instances of confluences is where we get those multiple time frame support and resistance zones overlapping. Okay. And when they do that, they form strong support or strong resistance. So when we break through, there's a good trade, or when it holds and reverses, it's a good trade. So a lot of the time, it helps you understand the behavior. So we're going to talk about ES today. During that European morning, kept testing this 15 minutes. So this is on a 3-minute ES, okay? Kept testing this support lots and lots of times, this 15-minute support. And then we just started to print a 3-minute as well within there, okay? So this version of the Guardian Zones is still under review with me. All it does is improve the look of it. There's no, so where we see this yellow here, if I just take the 15-minute off a minute. So this actually occurred after all of these tests here. It started to print. That was the final straw here where we tested that support, started to print here. So in any future tests, it should respect, okay? We put the overlay of the 15-minute on, and we can see now we've got that confluence of support. So really, really strong. So this is me coming into that pre-market session with ES, looking for some more volume. Again, I'm not going to take this long from this 15-minute because there's no confluence. There's no other zone. The next pivot here, we do get that zone that's printed. You can see I did take a little trade from here to here, okay? Because you see my ribbon, it turned red, okay? So I was very sort of aggressive with that. So I'm almost testing the water. And then we get another move down. Now, this move to me was really, really strong, purely because we had higher than average volume going into that support. And then the next leg was higher than average volume and higher volume than that previous candle. How do I know? Because I'm using the manager to help me understand the behavior. So this was really good. So I went really aggressive at this market buy on at this point here. And we can see we had higher than average volume move up on every single candle all the way to the next 15-minute zone. So I was on 2 contracts. Always in the plan was to take the first contract off at that zone, and I think, and then make it risk-free. So I think in the futures trading on the Discord group here, where are we? Okay, so we can see here I shared this this was sort of 10 points up at this time. We'd moved all the way up, hit there, took that first target off, and I was risk-free. And that's one of the things that we're really looking for. Then I've got it on quite a few different chart sets, flipped over and started sharing what I was doing with the manager now. With the latest one, we see the manager coming down, testing that pivot, and this candle making higher highs than this pivot. So when we get that first pullback and we make that low pivot, and then we breach the high of that, for me, that's time to be aggressive, then let it run a little longer. Okay, so trade management is very, very important, and having the manager as part of your strategy really, really helps. So again, I had the opportunity to continue this trade quite a long way, but it didn't. It took me out at this point here. So again, one of the reasons why I would not have taken that out if it wasn't for the bloody data and Rhythmic and Apex is that these were lower than average volume candles coming back. There was no real sort of massive volume sell-off at that point, and then you can move up again. So this is where your next trailing stop would be underneath this sort of point here. But just draw that on here. Okay. Then what we do is we see at this point here, there was a higher than average volume rejection of the highs. Getting out at that point is the sensible thing to do. For those that are more conservative, they would probably follow this green ribbon, and you would still be in the trade right now. And it really depends on your risk appetite. Remember, you've just banked quite a lot of points. You're talking 40, 50 ticks on that first contract. And at this point here, you're talking another 50, 70 ticks at that point there. So it's a good trade. If you want to weather the storm and wait to see if the ribbon turns red, which it never did, there was more opportunities. And that's what we talk about when we do the training for the manager. It's just a 30-minute video, but it helps you understand the behavior of all these dots and the different colored candles, which are really, really important. But the main thing I wanted to get across today, I'm going to look at some different charts, is understanding the behavior around these support zones. And you need them on multiple time frames. Now, if you haven't got NinjaTrader, we can't provide the Guardian zones, which is the multiple time frames. You've got to go and watch one of my videos and do it manually. And it's one of those things that is one of the most important things within trading. You don't short into support, you don't go long into resistance. You need to continually update those. So we can see on this particular chart with the S, because we've been running, there's nothing up above, nothing. The only one that's just started to print right now is this short-term 3-minute support. From all of these pivots here, you see it's just started to print on this point here. Very short-term support. If we just zoom out a little bit, we can see there's a 30-minute zone down at this point. This was tested last at just here. There's 15-minute zones. The data series doesn't go back any further than that. But we see there's some strong zones. But if we go to oil, for example, we can see that we're actually hugging a 60-minute zone right now. Not many trading opportunities. Even on a 3-minute here, we're really getting some strong support. So again, understanding that behavior, and then we're actually forming a range. So we're on the 3-minute Heikin-Ashi again. We've got multiple zones here now, okay? So really sort of strong support on the 3-minute. We can't push through and clear above this 60-minute zone. So you've got to look for an alternate strategy to trade within that zone on a much smaller time frame if you're going to have any opportunity. The roller coaster that we have is a prime example of that type of strategy, where if you look at it on oil on the 135 Union Renko, we can see tests, and every time we print a red line, that's a trailing stop. So we can see there's a roller coaster motion. It's in the groove, but they're only small trades. We're talking 73.81 to 73.55. Okay, so there's not a great deal of trades, but they're all it's little scalps really within that range. There's nothing sort of major. There's no runners that you're going to get, and sometimes that risk is not worth the reward when you're looking at. So if you were trading oil and oil alone today, there wasn't many trading opportunities. And if you're looking at Slingshot there, remember, Slingshot needs it to trend. Okay, there was one trading opportunity here when we pulled back in, came up, got the pullback, and then the short. That was it, really. There was no real fantastic opportunities because we're in a range. And accept that. Understand where those confluence of zones are, where those support resistance zones are on different time frames. And actually, if oil's your instrument, very little trading opportunities today. So don't stress about trying to trade it when it's just not tradable. Not every instrument is tradable every single day. Let's go to gold. Now, there's a lot of fresh air underneath here. These are good looking trades. I'm not, obviously you've got to work out the signal strategy they're going to use here. But again, we've got lots of support around this sort of zone here. So we've got to be very careful if we're getting much lower. Now, if this pivot is tested here again and moves away, we're probably going to be printing this. I'm using a 62 tick Heiken-Ashi on this. I'm just testing this different chart type at the moment. But again, it's about understanding that, pre-market, there was some good moves, okay? Because we moved from here all the way up, back down again, all the way up again. The breakthrough was a really great trade after the market opened. So there were some good trading opportunities there. Not a lot of confluence, and that's sometimes that's the way it goes. I really just look for confluence, to be honest, for the really strong trades. I've had some really great trades. I think I shared some on gold the other day. And again, with ES, that's still going. So what I want to do now is I just want to look at some different instruments. So is there any NASDAQ nutters in the room? We won't judge. Just let me know, and I'll put NASDAQ up there. No. Good. Someone's listening. Okay, so let's go for... I haven't looked at a long time, is RTY. And then we'll look at soybean as well. Now, when you're trading these zones, you're not going to be using, the zones are there to help you when you're trading other strategies. But if you're just a zone trader, for example, you don't need to be on Unirenko or anything like that. You need to be on tick or a minute candle, because what we're looking for are those confluences of higher time frames. So the time frame that you're on, if you're on a very small time frame, you potentially going to have a lot of short-term support resistance. And then we're looking at the 15, the 30, the 60. So we're looking for that confluence really to give us that sort of, that really strong resistance. And I straight away, I can see this is just phenomenal. So we've got an overlap of 15-minute zones here. We can see, I'm wondering if I take this chart a little darker, whether you'll see it or not. Let me have a look. Let's change the chart background a little bit. Let's change it to silver. Okay, that's better. So we can see here there's an overlap of 15-minute zones. Okay, really, really strong overlap. You see the way it touched the overlap before and it came all the way down. Okay, now look what it does. It comes and tests that 15-minute zone. Yes, there's a bit of spillover, but that's fine. But we come back to test this confluence of zones again. We get this double top form, and then it just craps itself. Okay. Then we find support here. This is not a trade right now, by the way. This just starts to form the 30-minute. So we've got an overlap of 15 and 30-minute now. So this deeper pullback where these pivots are here, was the last sort of point of control before we started to print that, and it was testing that again. So now in this near future, if we get that support tested, there's going to be a potentially good long trade, or this could come up and push into that resistance on RTY. We can see now we've not just got the overlap of the 15. If we just remove those 15s, we've got a 30-minute here as well. So this is a really strong resistance. So, what we'd be looking for is understanding that behavior now. Even if we weren't going to trade those zones, we're going to be looking for using our signal strategies that we've got to trade between those zones, making sure we've got fresh air. Okay. So that really, RTY looks pretty good. And it's not to say that this could push up through and we get a breakout. When we get a breakout of a confluence of zones, it's very, very strong. It might run out of juice, come back to test. Then there's a great opportunity to go long there. So when I talk about setting the operational landscape in my book, we need to understand that these multiple time frame support and resistance zones are very, very important, because they are respected on those higher time frames more often than not. And then when you've got a lot of them overlapping, you've got a confluence, they're extremely strong. So people that are day trading on the 5, the 15 are respecting those, but also those that are intraday 30, 60 minute and swinging those over maybe day or two, those trades, they're respecting that same zone of price as well. And then, lo and behold, sometimes you get all of those within a daily zone are very, very strong as well. So you need to set that operational landscape right at the beginning. Okay, let me just remove these. And that operational landscape needs to be updated throughout the trading day. And this is where the Guardian Zones comes in. Now, can you just give me a shout out in the chat box who has NinjaTrader? And if you haven't, let me know what platform you've got. There. So I'm just going to choose, and while you're all saying that, NinjaTrader, good, NinjaTrader. I tell you what, I've got Rhythmic on at the moment. I'm going to try and put the stocks data on. Okay, I don't know what it's going to do to here, but we'll see. Okay, it hasn't broken anything yet. Okay, Mel, yes, NinjaTrader Guardian Zones, Joe Smith Trading View. Okay, NT8, NinjaTrader. Okay. So I'm not saying it's my mission to change people over to NinjaTrader, but I've been doing this a long time and I love TradingView. Okay, I've got the TradingView Pro. Okay, if you're a professional trader, you can't have a normal TradingView. Okay, they just won't allow it. You have to pay $2,500 a year for a pro platform. Gives you a bit of extra few tools, but if you see. This is taken from the other screen there. I just need to you see this TradingView Pro down the bottom left there. So if you're classed as a professional trader, you're going to pay with them $200 a month for data, by the way, and you're going to pay $2,500 a year. Okay. For a pro trader like me with NinjaTrader, I paid $1,500 for life for a multi-broker license, okay? Instead of $2,500 a year. Again, yes, I pay professional data fees, but they're not as much as TradingView. But one of the things that NinjaTrader does is it downloads it onto your computer. If you've got a fast computer, we can develop the logic for NinjaTrader that we can't develop for TradingView because it's a cloud-based system. So they've only got so much memory, so much computing power because they've got lots and lots of users. So there's a restriction on what logic you can run through that platform. Now, with the Pro version, I'm going to trial a few different things. But for example, Guardian Zones is extreme logic, and I've got a friend. He's got a PhD in computer science. He's an amazing coder. He's just phenomenal. But he had a look at trying to convert this to TradingView, and he just wouldn't do it. He couldn't cope with the logic. So it looks simple on the outside. But it's not that simple when it on the algorithm behind, because it actually takes zones away as well as adding them on multiple timeframes, all on the same chart. And that, we just had a recent email from somebody that's got Guardian Zones, and that saves them 30 minutes at the start of every trading day because they're already done for him. His operational landscape is already set out. Not only that, during the trading day, when you see those support and resistance zones formed, it saves another 30 minutes a day. So an hour a day for $100 a month, 20 trading days, It's a very cheap labor cost to save you from doing all of that work. So let me just bring in Apple. If that data works alongside Rhythmic, and I'm going to go 10 minutes just to, let me get the data series to bars. So we need 2,500 bars. So it's not just stocks. So it's not futures, sorry, it's stocks as well. And this is a very, very important tool when we're looking at stocks. Not many people day trade stocks these days. But again, if you're a sniper, you can really make some real great trades here for, on Apple, for example. So we had the gap down, we had the gap up. Let's talk about this particular behavior after the gap up, which is very important. So with stocks trading, it's a little bit different. Obviously, you've got the stock session got an open, a close, a high, and a low. So it's a different type of strategy, but the zones still remain true. So here we gap down, we find support, no trade there, let it close the gap. It gapped up the next day. We've got a 30 and a 60-minute zone here, confluence. Once it pushes through during that session, wait. Profit taking will happen. Why? Because a lot of people speculated and bought down here. It gapped up and they're going to start to take profit. Okay, it's natural human behavior. See how that then finds support at this confluence of 30 and 60-minute zones. That's the time when it pulls away from there to take that trade and swing it over. Okay, swing it over, keep going. I'm not going to put the manager on there and all that sort of stuff, but that's the trade you're waiting for. That's January 18th, January 19th. We're finding a double top here, not going anywhere right now. We're going to be very tight on that, stopping it to get out around about January 25th there. The next thing is we wait. We come back down, we test this. This is a confluence of 15 and a 30-minute zone, the cyan and the green. So let's just get that a little bigger. So there's not a lot of fresh air to this 15-minute zone here, so we're not going to take the long, okay? Remember, we need signal, we need confirmation, we need fresh air. One of the three ingredients that I always preach is fresh air. There's no fresh air between here and here. If this wasn't here, there was no resistance and support because these previous pivots, the software's pulled up, and this is what was respected. So there was no long, but look at this coming through here. Okay, you're going to have a short order just underneath this pivot, and that's the Apple trade all the way down to the next zone. Okay, all the way down, breaks through, finds support here, comes back up, tests this confluence of 60-minute zones here, gaps down again. To be honest, when it gaps down again and starts to push back up, me, human being, would actually take profit at that point there. So again, whether you're trading stocks, futures, we can look at forex in a minute. Support and resistance zones. Defining that operational landscape is very important. And what the Guardian zones do for you on NinjaTrader is do the work for you. And it even takes them away. Okay. We should look at the previous zones there, and we can take them off. Okay, so it takes them away when they're no longer tested, and we always keep them current, even all the way up to a weekly zone. So very, very important there. So I'm not dissing TradingView. I'm not saying that Thinkorswim's bad. I'm not saying TradeStation's bad. All I'm saying is that for the new trader, for the new age trader that wants to use technology, and my book, Confluence Not Coincidence, actually really looks at that, the confluences of economic data, support and resistance. We're looking and using technology to actually make our trading easier, and that's what this is designed for. The problem is extreme logic, and that extreme logic will not work on Think or Swim, TradeStation, TradingView. It will work on NinjaTrader. And we've worked closely with them. And I can say that one or two of the updates in the last year was purely because we've been actually testing NinjaTrader to its limits and been talking to them and saying, you need to do this and need to do that. And they've listened, and we can develop some really cool stuff. And those with the slingshot will know that very, very well. Absolutely, George. Yes, the Guardian Zones are well worth the money. It's about, you're paying somebody less than $5 an hour, an algorithm to take the heavy lifting away from you so you can concentrate on the trading. Let's see if we can get some forex data going in here and go to the euro US dollar. But this time I'm going to go more for intraday and swing. So I'm going to put it on the 30-minute. We may have to redo the data series, or are we good? Are we good? We're pretty good. Okay. So a lot of forex traders I haven't traded forex for a long time. Okay, so a lot of forex traders. So this here, I'm going to go that back to white, is a daily zone. Okay, let's go back to white. Oops, no. Should we go dark? Yeah, there we go. We can see them. So these are daily zones up here, really, really strong daily zones. So if this is tested again, we see another one form here where we're overlapping. Excuse me, this overlap zone is really, really strong. So because we're on the 30-minute, you don't see green. You see yellow because that's the native time frame. But now we can see that we have confluence of the 30-minute, which is yellow in this case, it's native, and the 60-minute, which is pink, really strong. We actually do push through a confluence of 30-minute zones at this point here and we go sideways. We do test it again at this point here and rejects. That's when it starts to print the 60-minute zone as well. Okay, never really recovered from that. Came back down. We've tested this 60-minute zone. Now we're starting to define our operational landscape because we've got a 30-minute zone just printed here. We've got another 60-minute zone printed there. So this is really strong support now. So those forex traders trading euro, US dollar, intraday, 30-minute, or even if they were going a smaller time frame, once it bounces off there, there's a good opportunity. So let's go down 10-minute on euro, US dollar, and we can see what that looks like. So here, look, we hit that once, we come back down again, and all of a sudden we start to print the 10, and then there's a 30. Okay, so now we get a big confluence, really strong. We've got a good support here. We've got confluence of 3 different time zone support, and look at the result all the way up to this point here. Are there any trading opportunities right now? No, because we've got a lot of short-term support resistance and it's going sideways. A lot of that to do with the US dollar going sideways because oil's going sideways. So right now there's a lot of sort of sideways action with the US dollar, and some of those things that sort of react to that have sort of run out of juice for now. But again, that's another prime example. Does anybody trade anything that I haven't covered in this session so far? Let's have a look at something really weird. Rejection. So this shows you where it came from. Can you see that? This is the new version, Christine. So if I just collect that there, that's where 1, 2, 3 touches. That's where it came from for the software. But what we're doing is trying to clean charts up a little bit by just clicking that, so you're not actually so it's not relevant until the 3rd touch. Okay. So really, once it starts to go again, I mean, you can have that on there and that will be like the previous version that you've got right now. So you can see where it came from. But what I'm trying to do, especially if we go to gold on a really small time frame, it gets extremely busy in there. So I want to sort of try and clean the charts up a little bit by not projecting it back to the left for the ones that actually formed the zones originally, because that is not necessary if you trust the Guardian zones, because they will start to print. Yes, so it's really, really strong. So yeah, the Guardian zones is an absolute must. So I'm just going to go to data series. I'm going to go to Unirenko, really fast time frame 135. Although gold's not been moving a lot just lately. Well, we need to give it time to calculate. Yeah, this new version not out yet. I'm testing it, and it probably won't be out for another 6 weeks or so, because I'm testing it with something else, so it takes time. So the only difference is it just cleans the chart up a little bit. The logic's still the same. It's just that we're shortening those zones because they're not relevant until we've had those 3 touches anyway within that zone of price. So that's still calculating. Let's go back to oil. Again, nobody in their right mind would try and trade oil, even on a 3-minute today. Really, really difficult trading conditions, sideways action. But unless you've got that operational landscape set out for oil, you've got the 60-minute zone here. You've got this sort of 3 minutes confluence of loads of different 3-minute zones right here. We really, really sort of strong. Once it breaks above this 74 and closes up above here, that could be a really good trading opportunity. But until it does that, you need to sit on your hands, because we've seen this move before and it just rejects. It never closed out of here, okay? So you've got to be very, very patient. Okay, so if I just show projections, we can see where they came from. But in reality, let's keep the chart clean, switch those off, because they're only going to be relevant once we've done it. So if I just go and show these projections here, we can see that we've got a pivot here, pivot here, pivot here, okay? And then they would test it again at this point. If I take those projections off, okay, we now know once that comes up to test again, it's very strong. We're not going to do it. So there's always the opportunity to leave those on if you wish. Yeah, that's what I'm trying to say. Sometimes we can be. If I put Nasdaq on here, it'll probably break it, so I probably won't. If we put something on like ES on a very fast time frame like this, let it calculate. I'm just going to close that down. In fact, I want to go the other way. I want to go, it slowed the system down just by doing that. It really, okay. I want to go to Apple again, but I want to go daily. Again, sometimes if you change chart type, you've got to change the data series back, because we need at least 2005 bars, candles. Because it needs the data to calculate. Okay, I'm going to go back to oil a second. Let's see how it rejected into there. On my other charts that I can see oil moving down. See how it rejected in that 60-minute and now this 3-minute as well. Really, really strong resistance. So with Apple, when I'm on the daily time frame, the yellow is daily, okay? The purple is weekly, okay? And we can see here, there is quite a bit of fresh air when we're investing. I made a video recently because before the slingshot was made into software, I did trade that strategy because it's one of the strategies I sort of incorporated with Elliott Wave for years. And over the last 10 years with the slingshot between the zones, no losing trades. Okay, that's investing, only buys. But very, very strong. So we can see here now we started to get this support just above 180 on the daily. It hasn't printed yet, but so that's the projection there. We can see it's picked in these pivots as well. It's really strong. But now we're looking, is it going to test up here again? Because this is really crucial for me, for Apple. This $200, this whole $200 mark, very, very crucial. But if it breaks through that, there'll be some more trading opportunities. So anybody got any instruments that they trade that I've not gone through? So I've gone to the forex, stocks. I'm going to put ZS up there. It'll take a while to calculate copper. Okay, let's put copper on the oil chart. There's a great breakout trade here today. Look at this, got this confluence of the 60 and the 30. Look how it holds here. Nice move up. I did actually trade copper today on the short side on this range breakout, but this is one of the trades in that actually got stopped when the data went out with Apex. So I don't know, is anybody a funded trader here? Because I'm starting to think it's not what it's supposed to be in my view anyway. So copper has been a fantastic trade today, to the short side and to the upside. There's a confluence of zones here, the support. If I just take off the 30, we can see the 30 overlapping the 15. Strong support here. So this was about 5:50, 6 a.m. So this was a European trade really up. The trade of the day really was we had so the New York Stock Exchange open. We were actually in a 15, a 30, and a 60. Really, really strong range, and the breakout to the downside has been very, very strong. So yes, copper behaves very well. Again, the software does all the heavy lifting. Look at this, okay? Overlap of 15-minute zones comes down, comes and tests it again, comes down, okay? Comes and tests it again, comes down. Now finds support at that confluence of 15 and 30. Comes back up again. Doesn't quite make it. This tells me the momentum's to the downside because if you join these, I mean, this is trading 101 here. We're getting lower heights, okay? Even though we've bounced off a really strong confluence zone, and we've had a fantastic trade, and to be honest, there was probably a slingshot trade in there as well. Okay, when it pulled back at this point, there was a long slingshot trade. So, but because we're getting these higher lows, this gives us more momentum to the downside. So when it does come to this sort of area, and we have the confluence of that New York Stock Exchange opening as well, so there's more activity on the US dollar, okay? So we get those correlations where ES was pushing up like you would not believe today, and I was in that trade. The inverse correlation with copper is very strong with ES, because obviously the dollar's going the same way as ES. We get copper coming down. So those confluences with that, the US stock market opening, the ES really pushing up. We've had these lower highs. There's a lot of stars aligning, and this is what I talk about in the book. It's about the confluences really that really make the strong trades. Don't rely on one specific strategy or one specific bit of technology, one indicator. Start to put a set of 3 of indicators together. Have the bias depth heat map there. Have the guardian zones there. Understand the behavior, the picture. Even in the book, we've got a digital book club as well for the book, where you can go and look at those charts actually in a large on your screen and understand. I talk through the chart from the left all the way to the right, discuss the confluences of why that behavior happened. Once you can get a grip of that, trading becomes a lot more easier. So you're in the trade on the slingshot, George. What time frame? We'll have a look at it on copper. Let's add the slingshot. Oh yes, there you go. Now that is a confluence, ladies and gentlemen. Okay, so I told you there was a buy signal on that there today. Okay, we got that lower high. Okay, it's coming down to test this confluence of 60, 30, and 15-minute support. We pull back into the pullback zone. Okay, on the slingshot. It tells us there's a type 1 sell. We go short, target 1, target 2, target 3. And as George has rightly said, he's still in the trade because he's following the trailing stock coming down. Okay, so we've got a confluence of behavior. This type 2 sell here, again, comes up to test this confluence of 2 overlapping 15-minute zones. Pulls down, comes back up, into the slingshot pullback zone, type 2 sell, target 1, target 2, eventually target 3, trailing stop taken out. Okay, bit of fresh air for this type 1 buy, which is a good one. Find support here, confluence of 30 and 15, pushes up, pulls back, type 1 buy, target 1, target 2, and just fails to get to target 3. It's almost like it just runs out of juice and then starts to come back down with force, really tries to push us through this, pulls back a little bit, slingshot pullback zone, short trade. Okay, George, that is textbook. Okay, well done. And I know that you are married to copper like I am. And, just trading that one particular instrument will pay dividends. So the recording, Lee, will be out sometime tomorrow, and it'll go in an email, and also put it on the Discord group and everything else like that. Okay. So yes, it is being recorded, and it will be out tomorrow, because when I finish, it will be 10 p.m. my time, and then it needs to render and all that sort of stuff. So I'll do it. I'll give it to one of the guys in the morning to do. Okay. So copper, really, you're talking, right. Copper, you need, it's around $6,500 margin per contract. You can't trade micro copper, it's very little volume, it's pretty crappy. I would say to trade 2 contracts safely, $15,000 for margin. To trade 1 around about 7.5, just to make it simple. So copper has some really great moves pre-market. I mean, this one really started pre-market, and then we had the catalyst, that confluence of the open to push us down. There are good trading opportunities sort of post London Open as well. It does go flat during, once you've had that initial move, but then most of the good trades sort of pre-market, and you finish by 10:30. So which product are you after, JT? The Guardian Zones and the Slingshot? Because if you buy the Slingshot Special Edition or lease it, you get Guardian Zones for free for the first 3 months. Okay, so let me just give you that link on the website. And because the Guardian Zones are definitely needed when you're trading the Slingshot, and all of those that do trade it will back me up there. I'm absolutely positive. So Slingshot, I'm just going to put the link in the chat in a second. So what you get is you lease it for 6 months, but you get 3 months Guardian Zones with it as well. Okay, because you need to combine them together. So what it does is gives you a good start and get you into the groove for using them together. Really, really strong. So that's the page you're looking at, and these are real people in the Discord group using Slingshot. Okay, all these different people together, and really, you see the Guardian Zones on all of those images there. Really, really strong. So yeah, perfect. I mean, I'm a big fan of copper. Okay, so if we just move that out of the way. So my chart set for copper, there's the copper trade here on the Unirenco that George took here. He's still in there. I have range breakout for copper. I have roller coaster, and I have the Slingshot. On the other charts, I have the VWAP Predator for copper. Okay, because I look for those confluences, those backups, if you like, for that move. So this move today, again, it's very difficult for me to trade when I'm actually getting ready and doing a webinar. But we had the sells on the VWAP Predator just before this pullback here for the sell on there. So again, when we're talking about confluences, we're talking about VWAP Predator is all about volume, and the VWAP has nothing to do with pullbacks and the Slingshot or even the Guardian Zones. But what you've got here is a totally different strategy, giving you confirmation. There's that really strong support that we talked about. There's the sell signal from the VWAP Predator. Okay, so you're getting a totally different strategy saying sell to the one you're just about to get one on as well, and you've got that support zone you're trying to push through. There's too many confluences to ignore, and the confluence trading strategy is very, very strong. You may not trade 16 times a day. You may not trade 16 times a week. What you will do is wait and trade the high probability confluence trades. Let's move that back over there, because I also have the xBrat algo there as well. So this xBrat algo actually printed a 6-star sell before the zone. So it's almost like building up the momentum with different strategies. So 6-star sell coming into support. So we're not going to trade that. But we're saying that the momentum, that means 12 confluences, 12 points of control out of 12 to print a 6-star sell. But we're going into support. So let's see what it does. Then we get a sell signal on the VWAP Predator. Then it just pushes through, and we get this move down, pulls back up. We get the sell on the Slingshot. We've got to go. Everything's saying go south. Okay. So, and obviously the bisect heat map's all red as well. So yeah, very, very strong. If you haven't got my book yet, why? Okay. Confluence, not coincidence. It's on Barnes and Noble. You can get it from Barnes and Noble. You can get it off Amazon. If you're in the US, Amazon.com. If you're in the UK, .co.uk. Just search your Amazon. Get the book because it explains this confluence trading strategy. And this really now is my focus because we've got all the tools that I want to develop over the last 10 years. We've got them all made. So now it's about combining them together, getting that confluence trading strategy, understanding those really strong support and resistance zones on multiple timeframes with the guardian zones. And when they converge, when they got that confluence of different timeframes, it's really, really strong. So, get the book. It's really, really worth a read. I know that I know Christine's got it if she's still in here. I know Gary's got it. I know Mel's got it as well. There's quite a few people that have already got it, and it is, it's been 5 years in the making. Because I couldn't release it really until all the software was released, because it really talks about how to use technology within this sort of confluence sphere to get those high probability trades. Thank you, Christine. So guys, anybody got any questions before I go? Because it's nearly 10 p.m. here, and I think we've had a good session. Really, really important to understand those support and resistance zones, and then to have those tools. So, one of the reasons why Bob took this trade is because he had a signal, he had confirmation from the buyer's depth heat map, and he had fresh air to the next support zone. We say with the slingshot, as long as you've got fresh air to target 2, that's enough fresh air, because these probability pullback zones are really probabilities to hit target 2. And he's still in this trade right now. So this is phenomenal. So yes, signal, confirmation from the buyer's depth heat map, fresh air from the guardian zones. If you've got all of those 3, they're the 3 parts of the puzzle to get you into the trade. So any more questions before I go, guys? Last chance. Thank you, George. Yes, you're obviously killing it. You're waiting for the right time, and that's the main thing. Thank you, Peter. I'm glad you learn every time we do a webinar. Thank you, Tara. Thank you, Jose. Cheers, Christine. Cheers, George. So, Lay, timeframes are all the same. So, when you're using ES, the timeframes are always the same for the guardian zones. It looks at the native time frame you're on, then it looks up to 15, 30, 60, daily, weekly, and it just calculates them automatically. The time frame you're going to trade on, again, you're going to ask the community if you've got the slingshot. So copper and oil 135. I think ES is pretty good on 135. Let me just bring the ES chart back up before I go, because I want to answer this question. I've got to find the chart now. I've got so many open. No. Got to find it. No. I think I left it on another instrument, so I can't. Just give me a second. Right. Okay. Sorry. Yeah, I use 3 and 5. So I use 3 minutes on the VWAP. Okay. 3 minute Heiken Ashi, and I use 5 minute Heiken Ashi on the xBrat algo. Okay. No problem. Sorry, I misunderstood. So 5 minute on the xBrat algo, Heiken Ashi has to be Heiken Ashi, and then the 3 minute Heiken Ashi on the VWAP Predator. And again, you've got to have the architecture. 5 27-inch monitors I've got here, and one big 55 vertically on the wall, which is like having 3 27-inch monitors vertically on top of each other. And that allows me to trade just 2 instruments, okay? And I advise you only to trade one. Understand, get the confluences, make it work. Okay, guys, thank you very much for today. I will see you all in a month's time. Great trading. I will try and do some more live sessions next week in the Teams. This week has all been frustration with the funded trader trial that I'm doing with data blacking out and all that sort of stuff. So I'm going to give it the rest of the week. If it still doesn't perform, I'm sorry, I'm not going to be able to help anybody that's on funded trader programs, because they're designed for people to lose, as far as I'm concerned. I may be wrong, but let's see how the test goes.